The critical role of community resilience and climate adaptation.
Well, thank you. It's a pleasure being here in Connecticut. This is my first time in Hartford. Thank you, Andy Mays, for the weather. I came from Montgomery, Alabama, where we're having a cold snap right now. It's probably going to be 89 degrees today. I understand it's going to get warm again, then cold again, then warm again, then cold again, and then I think it'll get cool, and we may get down to where we have a high of somewhere in the 50s or 60s or something like that. Who knows? But anyway, it's a pleasure being here with you today. We're talking about a number of things that are very important to all of us. We're talking about resilience, mitigation, climate change, and insurance. Now, we all know what those mean generally. We think we know what they mean, but they're words that have not really been used together like they are today, and only really in the last decade or two have we been talking about them in sort of the way we've been talking about them lately. They're almost becoming national buzzwords the way they're being talked about. We're having this great conference here, and there are conferences all over the country are taking place talking about resilience, mitigation, climate change, and insurance. We've been talking about them in Alabama for the last couple of decades, and it's because we found ourselves with two major hurricanes, Ivan and Katrina. In fact, let's think about Louisiana right now. Right now we have Tropical Storm Francine right off the coast of Texas. Later today we're going to have Hurricane Francine, and it's going to be going right through the heart of Louisiana, probably tomorrow. And in Mississippi, and I think my state of Alabama is going to get some of it as well. I'm supposed to be flying home tomorrow. That should be great fun. So we've been talking about this for quite a long time. You know, after Hurricane Katrina and Hurricane Ivan, Hurricane Katrina hit a good part of Alabama as well. Hurricane Ivan had us in the sights. Things were going crazy in our state. The market was going crazy. Insurance rates were going crazy. Legislators were going crazy. They were trying to legislate rates, and it was kind of insane. So even before he was Insurance Commissioner Jim Ridling, my predecessor, he was former insurance executive Jim Ridling, living in Montgomery, Alabama, retired, and then Governor Bob Riley asked him to go down to the coast and sort of be a mediator, sort of calm the waves. He said, "Are you crazy? You're going to send me into that buzzsaw." Well, he did, and he got down there and worked with industry, with academia, with locals, governments, with consumers, and in all that was going on down there, it was really insane. The legislators were going to legislate rates, and Jim Ridling said, "Hold it, time out, folks. Time out." He said, "You're not going to do anything about insurance. You're not going to do anything about rates until you change the economics of what happens after the storm hits. Build stronger, have less damage. And the domino effect of that is what's going to change the world." That started it all off in Alabama for us. A couple of years later, he became Commissioner Jim Ridling. And he pulled Charlie Angel in as Deputy Commissioner and Chief Actuary out of industry to start a mitigation program and a granting program where we would help Alabamians build stronger and live safer. They called it the Strengthen Alabama Homes. He pulled Brian Powell here out of obscurity in the receivership division of our department. I'm not sure what Brian was doing up there in receivership in our department, but we pulled him out, and he used his former military experience and project manager experience to take this program on. And we partnered with academia, and we partnered with consumers, we partnered with industry, and we partnered with whoever would come aboard. Nonprofits, Habitat for Humanity is one of the ones we work with quite a bit. And this program was born. Fast forward to today, we've spent a little over $74 million. We've mitigated a little about 7,500 homes. We're in 40 counties. Of the 67 Alabama counties, we haven't made it all the way to the northern part of the state yet. In Alabama, we're about to celebrate, I think maybe Monday, we're going to join IBHS and Smart Home America, and we're going to celebrate 50,000 fortified designations in our state. And we've become the most mitigated, most resilient state in the nation. And that was our goal in that. And it all started with Jim Riddling, before he was commissioner, saying, you're not going to do anything about the market, insurance, rates, or any of this until you change the economics of what happens after the storm hits. A lot of things happening today. No matter what you think about climate change, how you look at it, how you see it, it is an absolute fact that the frequency and intensity of climate-related events and weather emergencies and devastating events are increasing. The east, the winds are blowing in the east. Somebody told me the other day the winds are blowing in the east and the fires are burning in the west. We have to talk about these words together. Resilience, mitigation, climate change, and insurance. And we have to know how they work together. And we have to know how we can work together to address them. So we're going to talk a lot about them today. We're going to talk about them here on our panel. I'm very honored to be here at this program and have these amazing panelists with me today. Let me introduce who's here. We have Fred Malik, who's the Managing Director of FORTIFIED at the Insurance Institute for Business and Home Safety, IBHS. Now, IBHS operates a world-class research facility in South Carolina, one of the largest wind tunnels in the world. Jim Riddling, my predecessor, used to call them the crash test dummy people for building and home construction. So that's what we have at IBHS. Leslie Chapman-Henderson. Leslie is President and CEO of the Federal Alliance for Safe Homes. Now, folks, that spells out Flash. Now, I'm an old DC comic fan. That's not the Flash. But I'm not so sure that Leslie Chapman-Henderson does not actually have superpowers. So Leslie's here with us. Brian Powell is here. Brian, until just a few months ago, ran our Office of Risk and Resilience, and I had the pleasure as commissioner of appointing him director of our newly created Office of Risk and Resilience. That's where we house Strengthen Alabama Homes. For many years, he was the first director, sort of the founding director of Strengthen Alabama Homes in our state. Brian Powell has experienced the pain and the pleasure of creating something new and innovative and seeing it through the challenges we've seen about it. Those states, we are so thrilled that so many states are modeling that program in their own states. We've made all your mistakes for you. We've figured out all the things that we had to do, and Brian saw us through all of those things, and to create that program. And he's helped us work through those challenges and helped us create that program and manage that program. And then as soon as I put him in as director of Office of Risk and Resilience, he up and left me for NAIC. So I've not forgiven him yet. So we haven't actually spoken today. No, I'm just kidding. Jerry Theodorou is the Director of Finance and Insurance and Trade Programs at R Street. Jerry, I may just have to do like recently when you were testifying in the Senate, Senator Kennedy from Louisiana did. I'm not sure my southern mouth is going to get around Theodorou very well. So I'm just going to call you Jerry, if that's okay. So thank you, folks, for being on this panel today. Let's talk about those issues. Let's talk about resilience, mitigation, climate change, and insurance, and how we can work through some of those issues. And I think we're going to have some questions through Slido on here. Y'all pray for me that I'm going to be able to get through this. I'm really just a radio DJ and a banjo player at heart. I'm not sure I can handle this technology. I asked for an 8th grader to help me with it, and they've not given me that yet. So here we go. One of our questions we want to address in here, and I'm going to address this first to Leslie and then to Fred, is how can investments in community resilience specifically reduce the risk associated with climate change for insurers and policymakers? Let's start with Leslie on that one.
So first I want to say that the last time I was here, and it was a very long time ago, it was 6 degrees when I arrived. So I haven't been here in a while. That might be part of it, but after this morning, I'll be back in soon. So thank you for the beautiful weather, Commissioner. So I want to kind of give you some backdrop on how we connect to this, because our organization was specifically organized 26 years ago to focus on disaster resilience. We didn't actually have the cool word 26 years ago, Commissioner. We called it mitigation. Everyone was very excited about it. Just kidding. But early on, we were very fortunate because our partners of the future in the climate resilience space came forward and said, you know what? We want the same things. We have a slightly different focus, but the solutions that are at the core of how we advance resilience are really the same things. So you did not know this, but today you're meeting your cousins, because we are the resilience cousins, climate and disaster, and we go together, okay? So what's it all about for us? Just as you said, and I had a 12-year stint in the insurance industry prior to my 26 years in this role, where I had the opportunity to see on the ground post-disaster why we needed to do things differently. And how we connected to it, and when we look at it together, it's about breaking the cycle. We have a cycle. Unfortunately, it persists, but gatherings like this and the leadership of the insurance commissioners of the U.S., the partnerships with NAIC and others, are driving change. Just looking at the turnout here today and the frequency of this conversation. But how do we break the cycle where we build, Mother Nature destroys, and we rebuild, but do we do it differently? So that's always been the call to arms for us, and as far as how communities can make a difference, it all boils down in our ideas to three things. And there are additional solutions, and we're going to talk about that, but we can't skip over how we build. There's three places we get to resilience as an end game. One is building it right the first time with that climate risk and disaster risk in mind. The second is fixing up the old stuff that was built before we had our modern model building codes with all those insights that our engineering and science partners come forward with after the disaster, and we see those trend lines. In 1992, after Hurricane Andrew, we knew gable ends needed to be braced, so that went into the building code. And so it's a continuous process of improving the code based on what we learn. But the third is the culture of resilience. Creating a marketplace, as you've done in Alabama, where you have 66 plus 100 grants that went out, but you're celebrating 50,000 homes that are fortified. So the lion's share of those homes were fortified by the private sector because people started looking around and saying, hey, what's this all about? So in our work, when we look at resilience as a challenge and as an effort to make a permanent change, we said, what does a disaster resilient leadership profile look like? And of course, we look to the insurance, regulatory, the commissioners, and the directors across the country because you are the de facto risk managers for your state. You are propping up, in partnership with the insurance industry, the economies of your states, and you make all things possible, and when things are disrupted is when it gets really tricky. So we partnered with NAIC, and I want to invite you guys to pick one of these up. This year we published this playbook, and it really takes you through, and Brian is going to talk more about fixing up the old stuff through the grant programs, but you've got resources in here to guide you into these three paths to resilience. And as we work hand in glove with our partners in the climate resilience, we're merging because those solutions are the same. I just want to briefly mention on the building code front, our partners at the Code Council and other code development organizations are the silent defenders. And the building code conversation has in the past been a difficult one. In fact, I remember in 2011 after the Joplin outbreak, we talked to Reuters about the building codes and how we can build to withstand most tornadoes, which is a very novel idea at the time, coming out of the great work of a series of our academic partners. And I was a little elbowed by some of my partners that said, it's a little early to be saying that. How can you say that right now? Because we're in response and recovery. Fast forward to 2020, 2018, 2019, 2020, we not only talk to the press about the building code, but we get the call a week in advance. The hurricane's coming to Southwest Florida, as Ian did. USA Today will call and say, how's it going to go down there? We look at the codes. We have the tools, the analytics, and the ability now to predict how well it will or will not go. And that's where the insurance industry comes in to also align those codes that are in place and reward them. That's where FEMA has stepped in the past 5 years, which you'll see in this guide, the tools, the the studies, the information, and all the assets that our leaders have told us that they needed. So I think that from my perspective, after, oh my goodness, admitting this, 38 years, I'm so encouraged and I'm so excited about the direction, because what's been missing, we know how to build. One of my favorite quotes is from Dr. David Pravat at University of Florida Engineering. He said, you know, if we can put a man on the moon, we can keep a roof on a house, right? And we know how. So what's the problem? We just have to do it. But the change making that's in place and the acceleration you'll hear about in the fixing up the old stuff programs is the leadership of our insurance commissioners and that community that's making these linkages and hosting events like this. Whether it's you know, the passage of DRRA in 2018, and Natalie Enclave from Build Strugg's here, she's going to talk about, we gathered after we got those federal dollars to come forward on the pre-disaster basis, which is a critical part of this. The big question is what's next? And so we were a cause and a need seeking partnerships, and the insurance community coming together to drive building codes and to create awareness. And building codes have to rise up in the esteem of the public so they understand it's a delivery system for everything they need to meet this resilience challenge.
Fred?
That's a hard act to follow there, I tell you. So
Glad I'm calling on you.
my name is Fred Malik. I'm the Managing Director of the Fortified Building Programs at the Insurance Institute for Business and Home Safety. And as a fellow Southerner, my panel here, we're all from the South. We enjoy this weather immensely. So thank you from me as well. I'm coming up from South Florida. I'm a builder by trade. I did not come from the insurance industry. I'm not a public policy person. I build houses. And I come from a group that historically is reluctant to change. You really got to prove it to us that something needs to be done because it directly impacts the affordability and our ability to sell homes. But over the past 16 years of running the program, I have been converted. So you will hear me and see me out on the soapbox out there. Because builders play a pivotal role in shepherding that change that Leslie talked about. I think that Leslie also made a very important comment that in order to be resilient, in order to face the demands that are coming from climate change and changing weather, it does take a culture of commitment. You cannot affect change passively and just expect it to happen. You're going to have leaders and local stakeholders who drive that change and invest in making the change. The science is very clear that, and that's what we do at IBHS, is we look at the built environment, we can test buildings at an unparalleled scale, but we also look at the meteorological elements of weather because we have to anticipate what's going on to happen. The science is very clear. The environment is getting wetter. That's leading to things like rapid intensification for tropical cyclones. It is shifting and widening the area where tornadoes and severe wind events like derechos can occur. And we are seeing a gain in northern latitude for tropical cyclones. So places like Connecticut and New England need to be thinking, this is coming our way. We have to get prepared now because 10 years from now, it's going to be too late. You're going to have an awful lot more inventory that's built in a more fragile state. Something as simple as sealing the roof deck, which I'm going to set up an example of that out in the lobby for you all to circle by and take a look at that. But something as simple as that can make a really significant difference in the community's risk profile. And when it comes to insurance, I mean, that's really what we have to do as builders and consumers, is we have to make ourselves better risks to insure. The absence of improving our properties as risks is going to mean higher premiums to cover the risk. And if we want lower premiums and greater availability, we have to mitigate, we have to become more resilient. The last thing I'll say about making investments, I think the commissioner here and the leadership that Alabama showed in following the science said, you know, what can we do to stimulate that change? And as Leslie mentioned, they've invested tens of millions of dollars to fortify thousands of homes, but that's only a small percentage of the homes that are actually fortified. And so that stimulus creates an opportunity to train the workforce. It creates an opportunity to talk about what change is possible, and that is ultimately what begins to be the engine that drives change. And then other things like code considerations and recruiting the workforce can come along with that. So the last thing I'll say about that is that the very smart thing that the commissioner did in the state of Alabama, places like North Carolina, Mississippi, Louisiana, Oklahoma, they focus on the roof. And when it comes to residential and commercial structures, the most vulnerable system on the building is the roof. If you make sure that roof is going to stay intact, keep water and wind out, you're going to drive losses down.
I used to hear Charlie Angel say it all the time: if you lose your roof, you lose your home. If you lose your roof, it becomes a water bucket. You're going to lose your home. So, Jerry, what are some of the examples of successful community resilience projects and how they impacted the insurance markets in those states? Can you help us with that?
Yes, thanks for the question, and it's it's a personal pleasure for me to be back at the building. The last time I was here, I was standing right about here in the bass section of the Hartford Chorale, Hartford Symphony Orchestra right there, so it's great to be back. The Strength in Alabama Homes was really the forerunner of other successful programs. The numbers are that an Alabama home that's fortified sells for 7% more than one that's not fortified. So those are real numbers. And the program was sort of exported by Louisiana. And in Florida, as Leslie knows very well, there's the My Safe Home Florida program, which has been renewed. So there's other examples that followed on the great work initiated in Alabama. And Commissioner mentioned Hurricane Katrina, 2005. A good case study is to compare the aftermath of Hurricane Katrina to Hurricane Ida, which 16 years to the day after Katrina struck Port Fourchon in Louisiana. And so what are the differences? Well, we all know Hurricane Katrina, about 1,800 people were killed in this Category 3 storm in New Orleans. The levees were broken, and after that, the lessons were learned, and New Orleans went about strengthening the levees, building back better, building back stronger. So we were all watching about 3 years ago with Ida, will the levees hold? And they did, because of the investment that was made in the barriers, the water barriers, and the levees, and the dams. So it really was effective. This was 2021, 3 years ago. So this is holding, and that's a good example. And if we think further afield, we talked this morning about international collaboration, cooperation. We have folks here from the UK. And I think of the Netherlands, which is one of the low countries. Most of the Netherlands is under the sea level, below sea level, and for centuries, the Dutch have had severe flooding occasions. 1953 is really when it came to a head, when there was an incredibly powerful storm, 1953, that took about 2,000 lives of Dutch folks. The barriers were broken in almost 100 areas. And so the Dutch sat down and they planned to really strengthen the defenses. And the politicians were aligned. The House, the Senate in Holland, Queen Juliana signed it into law. And for several years after that, the strengthening of the measures resulted in Holland not having one of those storms for over half a century. So that worked, saving tens of billions of dollars. And so we have those examples, I think, are good case studies that we can think of. Alabama leading to other states adopting similar fortified required programs, and Katrina versus Ida, and the 1953 learning from the Dutch.
Thank you, Jerry. Brian Powell, let me ask you this one. What role do public-private partnerships play in enhancing community resilience, and how can insurers collaborate with local governments and organizations in these efforts? I think back to the Strength in Alabama Homes, we've done an awful lot of collaborating with local governments and with local organizations.
Yes, they play a critical role. That's the role that the public-private partnerships result in when we start talking about collaboration on programs like the mitigation program in Alabama. give a couple of examples, the collaboration that you have with these public-private partnerships can do several things. Number one is for a small program, fledgling program that's growing. And by the way, with the NAIC, I have the absolute privilege of traveling across the country and working with insurance commissioners and their departments on establishing these mitigation programs. And I always mention to them, or at least consult with them on developing these public-private partnerships. What they can do for you, at least at the state level, is they can give you a force multiplier. When you have public-private partnerships with entities like Habitat for Humanity, for some reason, Habitat for Humanity is very good at processing paperwork and building homes. Did you guys know that? Very good at it, right? So what you can do is you can utilize that. And another thing that it does is partnerships like that also reach out to those that need it most. They typically have a host or a list of consumers that need the assistance that these programs can bring. And by doing that, what you're doing is you're not only developing a larger footprint of the program, but you're also minding the gap at the home level. Because once you do this, now you have assistance to bring in other partners like the insurance companies and insurance industry to help insure these homes that perhaps maybe weren't insurable before the mitigation programs, or perhaps they are receiving a better product to cover their homes. And we did several of these projects when I was with the state of Alabama. We did a couple of them with insurance companies. One was in the Birmingham area, where in the center of the city, this new stadium was built, giant municipal stadium, and the insurance company had the naming rights to the stadium, but they wanted to do something for the community and start maybe looking at mitigation and maybe bringing up some of the neighborhoods that were located around the stadium. So we entered into a partnership with them and also with Habitat for Humanity and a few others, and began mitigating homes. And I think I don't remember exactly how many we did. I think the project was wrapping up just as I was leaving the department. But I think we did around 200 to 250 homes in that area. And there again, what we saw is an opportunity for insurers to go in and help offer insurance at affordable rates and a better insurance product than probably what was available before. We saw the same type of program that we initiated down in the southern part of the state on the coast. There's a community down there known as Africatown, very rich history in that community. And in that community, there were areas of it where insurance companies wouldn't even write because of the risk of loss in those areas. So we went in with Strengthen Alabama Homes, and we started mitigating homes. And after we did quite a number of homes in a very tight concentration, we partnered with some other partners that came in and did some other work on the homes, so those homes were insurable. And we started seeing that gap being closed in that we had insurance companies going in and writing insurance in those areas, and they were offering really good products, and they were affordable. So we saw a growth in this microeconomic growth in the insurance industry in that area. These partnerships are critical.
You know, Brian, you mentioned the one in Birmingham. That was for the Protective Life, and we mitigated homes in a couple of hundred homes in 5 historic, very economically challenged neighborhoods in the northern Birmingham area. And if you really want to know what this can do really at a local level and at a personal level, we went around and viewed some of those homes that have been fortified and talked to the individuals, the homeowners. And one lady standing in her front yard looked at us and thanked us and said, "It doesn't rain in my house anymore." It doesn't rain in my house anymore. That's when you know. That's when you know you're doing something that's pretty neat. It doesn't rain in my house anymore. Jerry, let me direct this one to you. What are some of the potential long-term economic benefits for communities that invest in resilience measures beyond the immediate impact of insurance premiums?
Yeah, well, we're talking about measures and ways to fortify and strapping the roof onto the deck, which these are things that can be done. But what about cost benefit? People want to see numbers, and do the numbers actually support the advantages of engaging in those kinds of projects? Well, if you haven't seen it, there's a really good report that came out just a few weeks ago that was collaboration between the U.S. Chamber of Commerce and Allstate Insurance. The title is The Preparedness Payoff, the Economic Benefits of Investing in Climate Resilience. And what the scholars did to produce this report is they looked at the well-accepted ratio of 6 to 1, that for every dollar spent in mitigation and in loss prevention, you get $6 of benefit. This is a sort of a standard that's well known in the industry. I see everyone on the panel nodding. But they went a bit further, and they saw that there's economic benefits as well that are not taken into account with the 6 to 1 ratio in terms of jobs that were lost, people that moved out of the state and weren't contributing to the tax rolls, loss in GDP, loss in productivity. We know the aftermath of Katrina, how New Orleans suffered. And they calculated the economic costs as about 7 to 1. So for every dollar spent in preparing and in helping rebuilding, you have an additional $7 of economic gain, which would be lost absent the measures. So really the ratio is 13 to 1. So it's a compelling set of numbers. And they gave some examples, about 5 detailed examples of realistic disaster scenarios in the Lloyd's market, the RDS, where they talk about what's the worst that could happen. You have 2 cruise ships colliding, you have 2 Category 4 storms or something like that. So they looked at 5 examples, including hurricanes hitting highly populated areas, drought in New Mexico, wildfires in California. They looked at 5 in detail, and they saw the amount of money that's needed to be spent to mitigate, to reduce the possible losses, was well below the actual savings. So it made sense. And in addition to the 5 scenarios, the hurricane, the tornado, earthquake, heat wave, another one, there's an additional 20 that are there where they documented what would be the cost to mitigate and what would be the benefits. So 13 to 1. So that's a really good example of what can be done and what the numbers are. And another one is repetitive flooding. Repetitive flooding. The Pew Family Foundation has done really good work on flood insurance. And one example that many of us remember that have read the Pew studies is that a Mississippi home, which was valued at $69,000, was flooded 34 times in 32 years. So after each of these flooding events, the NFIP rebuilt. There was no thought as to, is this economically viable? Well, the actual loss to the government, because the NFIP is a government program, was close to $700,000. So if they just moved that home or elevated that home for like a 5-figure amount, you wouldn't have had this near $1 million loss. And the numbers for repeatedly flooded properties are also pretty depressing, that only 1% of National Flood Insurance Policy Program policyholders are responsible for 30% of the program's losses. So you get this disproportionate impact of repeatedly flooded properties without the incentives to take the right actions, even following the very positive developments of risk rating 2.0. So the numbers are there to do the case studies and to make the argument that could convince people in the public sector or in the private sector with coalitions, with public-private partnerships, or individual companies to make these kinds of investments. So that's, those are some of the numbers.
Time permitting, I want to come back to flood, if we have time. But I want to ask this question, which meshes up nicely with a couple of the Slido questions I'm seeing from the audience, and that is what strategies can be employed to overcome the financial and political obstacles to investing in community resilience, and what can insurers do, and what role can they play in advocating for some of these investments? I want to direct that first to Leslie.
I think that one of the greatest challenges with resilience is it can seem very future, remote, and far off for ordinary people. And in our work on disaster smart leadership, we talk to mayors and local elected officials and others who have to take finite supplies of resources and turn them into services in their communities. And typically, the squeaky community need gets the resources. So in order to amplify community resilience and the types of investments necessary for climate adaptation and others, there has to be some appreciation in those communities, and those have to be reflected by the constituents, otherwise there's a big disconnect. And I think one of the chief ways to do this, which we need to keep working on, but it can be done, is to make these tactics and strategies understandable and visible. You talked about the Netherlands, and I remember after Superstorm Sandy, we were at World Habitat Day talking with the Netherlands. All of us can work as peer-to-peer conveyors of this message, but we have to make it something that matters to the individuals as well as in the big picture, because we do a lot of behavior-focused studies. We're constantly talking to people, homeowners, policy leaders, and others. And in the end, everyone has a lot to do, but it has to be something that comes all the way home to them. The strategies have to be understandable, they have to be relatable, and they have to have some impact on the community. We're talking about flooding, wildfire, and those types of disasters that are especially important for community-based solutions, unlike with high wind, where if you take steps for high wind on your own home, you have a really good shot at survival. But if you are in a wildfire zone and you do everything you can do, if your neighbors do not, it may not matter. So I think making those points, making them understandable. We were in Epcot for 8 years. I don't know if any of you guys ever went to Stormstruck, A Tale of Two Homes in Epcot. It was 08 to 16. We learned so much about how to message and talk to people from our greatest storytellers in America at Disney. And that was the first thing they said. You know, when it comes to disaster and climate, we're not going to win them over with doom and gloom. We're going to win them over with empowerment, success, and then we fill in the exact recipe for how to make it successful. That's what moves people to action. Human nature and human bias, if we give them the doom and gloom scenario, they're out. They're like, you know what? I got enough to worry about in my everyday life. I got to get my kids to school on time. So I think that one of the ways we can encourage the support for those types of investment is we have to take them out on the road, show people what they mean. A lot of the new technology, AR and other things are allowing us to show people simulations of what it can look like. I like the old stand by the pole and show the height of the last big flood event, which is 5 feet over your head. And people go, oh, okay. So I think that's one of the ways we can do that, but we just have to remember those messages need to be empowering, because scaring people into action, it might work in the short term, but we like to just leave that to the weather.
Fred?
Yeah, so I think that strictly speaking, most people, whether they're consumers, public policy folks, home builders, roofing contractors, they need an economic understanding. What's in it for me? And so one of the most effective strategies that we've seen for market transformation is the development of a grant program, helping to overcome that first cost, at least for a small segment of the population, so that people can understand what needs to be done and they can see that it can be done affordably. So grant programs have been successful in your state, they've been successful in North Carolina, they're growing in popularity in Louisiana, it's coming to Oklahoma, places like Minnesota, Kentucky, are all finding ways to creatively allocate dollars to incentivize a change. It's not only coming from the public sector. There are private carriers that are incentivizing. North Carolina, for example, North Carolina Joint Underwriting Association has invested upwards of $70 million over the past 10 years in their coastal roof mitigation program. Federal Home Loan Bank of Dallas has created a facility in 5 states that they cover where they will lend to partner banks that can then make low income or low interest or no interest loans to folks to be able to affect these changes. All of those things have been widely well received, and they have fundamentally delivered results, which is a really important thing too. On the backside, so for example, in North Carolina, there's There's been a study done by NC State that looked at 5 landfalling hurricanes since Fortified was emerged in North Carolina, and during that period of time, there was a 22% reduction in loss severity and frequency. So the carrier itself is seeing a significant change in their risk curve. But that investment is one way that municipalities and insurers can get involved. The other is to think creatively. You're not going to get all of what you need out of a premium reduction, especially in inland states. And if anybody's from an inland state here and thinking, well, high wind is not a problem for me, you're fooling yourself. It is a problem for you. It's a problem for everybody. Derechos can happen. Nebraska and Iowa had that July 31st, 90-mile-an-hour winds. You know, it's really important that folks look creatively at other stakeholders in the market that might bring value. Building departments who might accelerate plan reviews for pulling of permits. You need to find ways to also extend benefits to the builders and the roofing contractors, because right now the majority of the benefit comes in the form of reduced premium or reduced likelihood of loss for the consumer. So something's got to also help the contractors see benefit, because there is an upfront cost. There's a training cost, which is relatively small, and there is a hard cost when it comes to investing in products and processes that are more resilient. So those are some of the things I think that insurers can absolutely play a role, whether it's directly through premium reduction or through investments from their philanthropic arms, and as community leaders getting involved in local conversations around building code and incentives.
Thanks, Fred. We have a little bit of time left. Let me go to some of the Slido questions for our group, and here's one that I think is particularly important. It says, can you please elaborate on the role and importance of building codes in enhancing community resilience, including the difference between a fortified standard versus meeting current building codes? Let me first throw that to Brian Powell.
Well, there's a considerable difference, and I would like to ask for Leslie to assist me with this question. And the reason I'm doing that is because she is a building code expert, and she's been working closely with the NAIC and the work that I've been involved in on talking about building codes and advocating for building codes in areas that we're going into. So the difference between typical building codes and fortified.
So we call fortified code future, because the research that comes from Fred and his colleagues at IBHS makes the case through world-class science and engineering for changing the way that we create our codes. And the code, of course, is a cookbook full of standards, and those are the recipes, but it's a minimum standard. So if you're below code, you're not even up to the base. With fortified, I think one of the best examples of that timeline is the sealed roof deck. And the sealed roof deck research, I'm going to actually do another swing over and let Fred take this discussion of how the research at the lab determined that without a secondary water barrier of some type to create a sealed roof deck, and at certain wind speeds, whether it's a severe thunderstorm or any other type of named event, you're going to lose those shingles, which is the majority of what we use in this country. 9 bathtubs worth of water per minute of wind-driven rain are coming into your attic. So that has made it into the code in certain places, and it's on a trajectory. I didn't know if you want to talk more about how we do that, because then that's a great tee-up. He's got a display outside that you guys can come, and you'll be experts on sealed roof deck by the end of this morning.
I'll try to keep it brief, but the code, let's just level set here. The code is not the same everywhere. There's lots of places that are on codes that from the early 2000s. Connecticut has made the move to adopt a more current code version of the code that's promulgated by the International Code Council, but there's also a carve-out that says that any place you don't have wind speeds, expected wind speeds above 130, then you don't have to seal the roof deck. Well, I have news for you. The wind has absolutely no idea when it's supposed to not reach 130 miles an hour. It does not pay attention to contour lines on the ground. It doesn't stop. And shingles, which are on 70% of the roofs in the United States, do not last that long. They routinely fail at wind speeds of 60 miles an hour or thereabouts. We just did a display with Good Morning America that it really vividly showed that. So building codes are not the same everywhere, and that's something that's really important for people to understand. The biggest things is Leslie alluded to, we pay attention to how the roof deck is attached and how the roof deck is sealed, so that if the primary cover is lost, it can resist the water intrusion. Another key place where the code needs to improve, particularly inland, and where Fortified provides guidance, is around the garage door. Garage door is typically the largest opening in your house. If you're in a tornado-prone area or a high wind-prone area, here's something you need to know. If your garage door is not properly pressure rated, it can be just the simple force of the wind can cause that garage door to collapse. When it does, the air rushes in and pushes out on the walls and up on your roof, and that's when you get catastrophic structural failures. And replacing a garage door with a properly pressure rated door can cost you less than $1,000. But people just don't know it, including builders. Away from the coast. So we're driving the adoption of properly rated garage doors. There are other more technical intricacies that I'm happy to talk to anybody about, but the building code has, from a wind perspective, along the coast, has generally, from the IRC, the International Residential Code, has generally included a lot of the science, including the sealed roof deck now, but municipalities rarely adopt the latest code on a regular basis, and not all municipalities enforce it well, unfortunately.
Someone asked the other day, what are some of the main elements that have to go into a successful program outside of what we've talked about today in terms of collaboration between industry and academia and government and stakeholders of all kinds and partnering in these collaborations, but it's your Fortified program. It's the the mitigation program. It's building codes. It's the wind mitigation discounts, which give discounts on your premium. You have to all that pulling together, and that's what makes a successful program. We have just a couple of more minutes left, but I want to come back to flood. I didn't want to miss that one because a lot of people think flood is included in your homeowner's insurance, and most people don't even understand flood, don't even think about flood. So let me throw this to Jerry. How can we move the needle out there on that?
Yeah, thanks for the question, and you're right. A lot of people don't know that flood is not covered in the HO3 or the other homeowners policies, and so there needs to be more education, and we haven't talked about insurance agents, distributors. I think there's a role for agents to play. I think it actually could be an E&O exposure, errors and omissions, for not making options available and educating their clients into what needs to be done. Some departments around the country have got videos with cartoons. So a combined effort from the agents and the insurance departments and the state governments. But if I can go back, Commissioner, to the building codes question, I'd like to answer that with a question. What city that begins with the letter H has got the most insurance company headquarters?
Anybody? Anybody?
No.
Anybody?
No, it's Hamilton, Bermuda. Sorry, Commissioner Mason. Hamilton, Bermuda. Now, who's been to Bermuda? A lot of you have, and you're struck by the limestone roofs that they have there, right? Beautiful white limestone roofs. They're very heavy, and some of them have been around for 200 years. So that can withstand a storm, which often goes through Bermuda. And to Leslie's point, yeah, you don't want to be coerced, but they've got a strict building code that if you have a house in Bermuda, you have to have that kind of a roof. Not only does it reduce damage, but also it collects water, because Bermuda is a dry island, no fresh water. So the water comes down in rivulets from the roof into underground cisterns. So they've solved two problems with one building code, and sometimes coercion works. I'm not suggesting that, but just pointing out Bermuda.
That great curveball there. I love that. We've got a couple of minutes left, so let me finish up with this one. A Slido question from the audience. What's the biggest misconception about resilience that you wish more people understood? Leslie, quickly.
That it's complicated, expensive, and hard, and it's not going to happen to me, so I don't need it anyway.
Misconception, right? Got it. Jerry?
Misconception that I'm covered, and it can't happen here, not in my yard, but it does happen.
Brian?
Nothing's going to happen to me, and I don't need this. I've seen that quite a bit. I don't need the mitigation. I don't need the protection. And if I do try to get it, it's going to be unattainable and very expensive.
Fred?
Well, I agree with everything that was said, and I'll try to be a little bit different, that the customer won't pay for it. It's a misconception. They will. They see value in it.
Is it worth it? Leslie?
Absolutely. And it doesn't have to, you don't have to have a disaster for that to come true. Just the way people tell us in those many studies, how they feel when and it's winter freeze, severe convective storms, what we like to call thunderstorms, but the industry calls them that. Whatever it is, it's just knowing I'm okay. I've done everything I can do within my power to protect myself and my family. Safety tops out in all the research as the #1 with cost coming right behind it.
Jerry?
2 words, the Boy Scout motto, be prepared.
Love it. Brian?
Is it worth it? I'm going to answer that with a question. Are you willing to bet your home on it? Are you willing to bet your livelihood? And are you willing to bet your life?
Fred?
Yeah, I do this every day, 16 years. Yes, it's worth it.
Thank you all. Fascinating. Jim Riddling would be proud. Thank you for being here.
Thank you.